This is FreshEd, a weekly podcast that makes complex ideas in educational research easily understood. I'm your host, Will Brehm. Today we explore tax cuts as a form of government expenditure and what that means for social inequality, politics, and government services. My guest is Melinda Cooper.
What ends up happening is that you just won't increase budget for programs as the number of users increase. So you resort to attrition of social spending on particular programs. And then there are the actual kind of shifts in funding. So higher education is the most flagrant example, where you have a very dramatic shift in who's paying for a supposedly public system from the government to the individual user or the individual households. But through a kind of interesting hybridization where the government is in a way backstopping that and managing that to the tax system.
Melinda Cooper is a professor in the School of Sociology in the College of Arts and Social Sciences at the Australian National University. Her newest book is entitled Counterrevolution, Extravagance and Austerity in Public Finance. I spoke with Melinda in front of a live audience at the Manning Clark House in Canberra for the second part of an event called Taxing Times. I'd like to thank Claire Manning and Luciana Todd for organizing and hosting this event. So, Melinda Cooper, welcome to the Manning Clark House. Welcome to Taxing Times. It's really great to have you here tonight. I want to start with this kind of big idea, but it's kind of a very common idea where everyone thinks cutting taxes is a good thing, or tax cut populism. So what is tax cut populism? And do we know how widespread in any way that mentality is?
Yeah, I think the generic form of neoliberal populism is tax cut populism. I mean that when a political leader or a party wants to pander to the electorate in some way, it's very difficult for them these days to offer a new social spending program or any increase in public spending. So what they're going to do is offer tax cuts. And you can see how that has been very powerful for the right. I mean, it fits with their small government tradition that you would offer tax cuts rather than increase spending. But I think it has become a bipartisan politics. And I think where the Labour Party in the past would have found ways of negotiating around that, we saw in the last election that one, they were fully behind the stage 3 coalition tax cuts. And then when there was widespread recognition that there's a cost of living crisis, their response to that is more tax cuts. And that had the coalition absolutely flummoxed, because up until now, that had been their strategic draw card. They had been able to wedge the Labour Party by offering tax cuts again and again and getting the Labour Party to kind of clean up after them. And the Labour Party has now kind of blocked them. But it's not really a victory, is it? Because really we've just accepted this status quo that the only form of stimulus that you can engage, and it's a hidden form of stimulus, is tax cuts.
So how is it a hidden form of stimulus? How is it hiding spending?
Yeah, so I think the strategic interests of tax cuts for neoliberals, particularly the neoliberal right initially, is the fact that they know this is spending, but the general public don't intuitively perceive this as spending. In fact, most people, when you talk about tax cuts, they intuitively understand a retreat of the state, a kind of diminution of government fiscal power, a subtraction from government spending. But in fact, public finance economists accountants have recognized for a long time that as soon as you're in a fully developed fiscal state, a state where everybody is the target or beneficiary of taxation or spending to some degree, basically the state since at least the late 19th century, then any kind of departure from a baseline rate of taxation is going to be equivalent to spending. It's a kind of reverse form of spending. So it will have an equivalent effect on government accounts. One way of thinking of it is that the government can give you $1,000 directly, or it can save you $1,000 through a variety of tax preferences or tax deductions or tax cut. Now, people don't think the government is spending on you, but in terms of also your household budget, what this amounts to at the end of the tax year is either you've received a direct government subsidy of $1,000, or you've been saved $1,000 that you would otherwise have had to pay. So there's no economic difference. I mean, there are economic differences, but this gets very abstruse. There aren't many significant economic differences between spending through the tax code and direct public spending. There's an enormous political difference. And that is what has counted for the tax cut coalition. So I think the supply-siders in the big neoliberal coalition of economists and strategists, I actually see them as political strategists rather than serious economists. They were all about tax cut. And this is what people recognize them as, the tax cut people. Their whole kind of bait and switch was to propose a shift in public spending settings behind the facade of tax cuts. Really what they're interested in are tax expenditures, spending through the tax code. So really what they're trying to do is to shift where the government is spending and on what type of people it's spending, at the same time pretending to be not spending at all.
So what types of people are getting this spending then?
Right. So since about 1985, the tax expenditure budget, tax deductions, tax preferences and the like, has expanded quite dramatically. I think it's about 20% of the direct spending budget, although the calculation's subject to debate. And overwhelmingly, tax expenditures go to people who are either middle or high income earners, but especially to property owners and asset holders of various kinds.
So can you walk me through how does it actually work for, say, property?
For property, so property is where you've seen the most significant tax preferences introduced. So the worst offender is the capital gains tax preference that was introduced by Howard in 1999 on the advice of an American supply-sider, Alan Reynolds, who thought that this would incentivize investment in the stock market. So originally they thought all kinds of financial assets and that this would, it's supply-side economics, so this would stimulate the investment and productive economy. But for various reasons, and those reasons are pretty kind of hardwired into Australian social policy history, it goes massively into subsidising investment in housing. You already have negative gearing that was introduced by the Labor Party. They tried to get rid of it. They reintroduced it in 1987 because there was such a kind of real estate backlash against that. Negative gearing in Australia is already a pretty unique kind of mechanism because what it's doing is saying that you get a tax offset for any loss you make on an investment. So if you have to pay more interest back to the bank than you get in rental income, then you're basically, that difference will be deducted from your final tax account. What happens in most countries is this refers to other sources of investment income. In Australia, you can deduct that loss from your labor income too. So Australia is quite uniquely generous in terms of negative gearing. And it means that it's a tax preference that works best for people who already earn quite high incomes and are on the higher marginal tax rates. So the capital gains tax preference turbocharged negative gearing because it means it's not just during the life of housing as financial asset that you're claiming these tax deductions. Because until then you had negative gearing, but if you sold the property, you're still being charged the highest marginal income tax. Suddenly the capital gains tax on investment is halved. So you're deferring normal taxation of this investment indefinitely. Okay, so you compare that to the way in which labor income is invested, and you get a very clear sense. There's a very linear correlation between that and the fact that housing prices are going like this and labor income is going like that. It's a difference that's created by the tax preferences.
Seeing housing as a financial asset, as you're sort of talking about here, does this have an impact on housing unaffordability, which is a big topic in the news lately? And people, there's so many renters that can never get onto the ladder, as they call it in the UK.
Yeah, basically. So what I'm trying to argue in my last book is I'm looking at what creates a financial asset. And I think a lot of work has been done on, chronic low interest rates and quantitative easing, monetary easing, which is a factor that, again, turbocharged these tax preferences. But you really cannot understand why investment money and cheap credit go into particular objects and processes unless you look at the fiscal settings. So there's almost invariably either some kind of a regulatory preference, but more often some kind of direct subsidy or a tax preference, which is a subsidy through the tax code. So the capital gains tax preference and negative gearing is literally sucking this cheap money into this particular object. There's nothing there's nothing intrinsic to say a mildewy old, damp, dark property in inner Western Sydney, with rising damp and cockroaches, that turns it into this asset that magically appreciates in value by the year, like a magic pudding, much faster than your earning wages. There's nothing that can explain that, because the cockroaches don't get better. It doesn't matter if you renovate it or not. Million, 1.5 million, 2 million, 3 million, who knows when it will stop. But if you look at this over time, since 1999, you can see in the West house prices going like this, and it's directly correlated to the capital gains tax cut. You're literally saying that this thing will accrue capital gains by the year because you've taken taxation off those capital gains.
I want to ask a question around how big some of these subsidies get. I mean, in one of your pieces, you sort of highlight this point that superannuation, which maybe we'll have to get into a little bit, you say that the cost is $45 billion of some of the tax subsidies from superannuation, and that is almost equivalent to the cost of what a public pension would be for the same number of people. And that sort of blew my mind when I read that. Talk me through that. How, that's a massive number. Are there other sort of the size of some of these subsidies that you're talking about here on tax expenditures? Are they, on housing? How big is the tax expenditure?
I wouldn't know that from memory. But just to talk about this case, I think the latest estimate is 50 billion. And they're comparing not to a counterfactual how much the pension costs, but how much the pension costs now. So why this is significant is that the rationale behind kind of diverting people into this kind of self-funded model is that you would take the weight of the public pension that is funded through the general tax fund. So what you've created is this program that is at least as expensive. Next year probably will be more expensive. But crucially, it's incredibly regressive because most of this money is being spent on people who are either well off or very, very well off. In fact, as we know, superannuation is working like a kind of trust fund for people who are millionaires. And there's been a lot of pushback against the mere idea that the Labor Party might reduce some of those tax preferences, not eliminate them, just reduce them for people with superannuation balances of 3 million or more. So I think the lesson to take from that is a lot of this kind of diverting expenditure through the tax code was undertaken on the premise that we live in a world of austerity. We just can't spend anymore. There's these hard limits. But when you look at what tax expenditures actually cost, you realize actually there's some pretty extravagant spending going on. This completely undercuts the idea that we live in a world of balanced budgets or objective fiscal austerity. It's just that this very extravagant spending is largely invisible to the media, largely invisible to the general public. And it was very deliberately chosen because of this. If you look at the history of the supply side, as they realize that in the congressional process in the US, in the legislative process here, it's just not a form of spending that is, one, recognized, two, scrutinized, three, subject to auditing. I think there's a kind of fairly limited tax expenditure budget that's released between Christmas and New Year's that does not get reported on in the paper, does not kind of generate the same kind of uproar as any kind of public spending on some poor benighted dole bludger. And all this is very deliberate, that you would kind of cleave off one part of the budget process and kind of condemn it to the realm of invisibility.
And yet there's so much money being spent in that way, and it doesn't sort of generate this common public discourse around taxation, sort of invisible, as you're saying. And I guess you're also sort of saying that this is beneficial to most political parties.
I think certainly the right has making use of it, has exploited it much more vigorously and deliberately than the left or center left. I think where the Democrats in the US and the Labor Party here have kind of made their peace with it is that they've tried to reinvent their social policy vision through tax expenditures. So through childcare tax credits and the like, which the Labor Party has largely been responsible for because they have this constituency of working women and professional working women. So they've made their peace with that, but there's no kind of root and branch critique of what's going on here, which is a very kind of, in the long run, a very regressive kind of development.
So what happens then to the public services that actually do get paid for by and through tax? So yes, a big percentage of this is tax expenditures, what then of the things that are being funded in the public sphere?
So I think the baseline has been fiscal austerity, and that's not just the coalition. It's, Bob Hawke's turn to his trilogy of balanced budgets, no more spending, no more tax cuts in 1985. And this is where you see a real pivot in fiscal spending settings. So that's the baseline, but it is really hard to actually cut back established programs. You can cut back smaller programs. Really what ends up happening is that you just won't increase budget to programs as the number of users increase. So you resort to attrition of social spending on particular programs. And then there are the actual kind of shifts in funding. So higher education is the most flagrant example, where you have a very dramatic shift in who's paying for a supposedly public system from the government to the individual user or the individual households. But through a kind of interesting hybridization where the government is in a way backstopping that and managing that to the tax system. It's a hybrid. It's not quite a private system, but the individual student is ultimately responsible for spending on their own education. And it's quite phenomenal, the shift in higher education funding that's happened under that kind of users pay model. The other examples are trying to create alternatives to the public system that that are subsidized, but through the tax code by government. So that's the example of superannuation, which was imagined as an alternative stream to the public pension, which would take the weight off government. Obviously hasn't taken the weight off government, but what the government would do, subsidize private individuals to take care of themselves. This happens with the private healthcare rebate as well, which is not a substitute for Medicare, but it's a supplement to Medicare. So really it's a different model where the government is subsidizing household spending on formerly public services, or what are nominally public services. Colin Crouch refers to that as privatized Keynesianism, because it means the household goes into deficit rather than the government.
Which we've seen tremendously over time.
Yeah, and you do see household debt levels balloon in Australia. I think Australia has had some of the highest levels of household debt in the world. It's not exceptional. It's not an aberration. It's built into this model of shifting so-called social spending to the individual worker.
What about fees and fines? Write a lot on this topic as this is another form of sort of shadow taxation where the number of fines and fees has increased over time. How does that work and fit into this discussion on taxation?
Yeah, so I think where fiscal austerity has had particularly extreme effects is at the level of state government and local government. And that was another decision made by Hawke, I think in 1985, where he ended the automatic transfer of a certain level of federal government funding to state governments, and hence knock-on effects to local government. And I mean, the GST to some degree that was introduced later came in to compensate for that. But in the background and in the long term, what has happened is that state and local governments have had to compensate for their lack of autonomous tax base by introducing these invisible forms of taxation. Essentially consumption taxes, and consumption taxes are always regressive. They're not calibrated to your income. The poor pay exactly the same as the rich, but they're consumption taxes that often aren't called taxes. So they might be a rise in motor vehicle registration fees or licensing fees for state government. At the local government level, it's just this kind of proliferation of all these very minor, not so noticeable, but maybe just kind of annoying little fees. Parking fines are every kind of little venture you make in your car. Library fees go up. You might go to, I don't know, the zoo or some local event, and there would be this little fee. And they're not all that noticeable, especially if you're on a regular income. I think at a certain point, they do become noticeable, even if you're on a regular income. So I think the phenomenon of toll fees in Sydney is very noticeable now, just because it's gone beyond the level of the very poor and the homeless being directly impacted. It's, small businesses, people who have to travel from Western Sydney to the city every day taxi drivers, people who work people who are removalists, this kind of thing. But for the most part, I think that proliferation of invisible consumption taxes really just hammers people who are not on steady incomes, people on Centrelink, the homeless, people in public housing. It has a very dramatic effect on Aboriginal people, which becomes obvious or became obvious in the very high levels of incarceration of Aboriginal people for unpaid fines that we saw up until a couple of years ago. That's become a little bit harder, but it's not a great outcome because the alternative is workfare. Basically, you work to pay off your fees. So forced work to pay off your fees. So it creates a situation of permanent indebtedness among the very, very poor, basically for moving through public space. If you think of it, everyone has to move somewhere. And when you're poor, you spend more time in public space and you're basically walking through this minefield of, transport fees, parking fee, car registration. If you've ever been very poor, even for a short period of time, you'll realize that, this is really, really expensive. And once you get a fine for one, it accumulates because you can't pay it. And then you'll get interest on that fine. And then it kind of really inevitably snowballs.
In your book, you talk about James Buchanan as sort of the forefather or the founding father of an idea called public choice theory. And he actually saw some of these ideas of the user fee as like essential, as part of his theory, as part of how he wanted public finance to operate. Why? Why did he think this was such a good idea?
He thought it was a good idea. I mean, you can think of him as the father of neoliberal fiscal austerity. Obviously, fiscal austerity and balanced budgets has a very long history in liberal public finance. But he reinvented public finance, if you like, as a way of redressing and neutralizing any kind of gains that had been made in neo public finance or Great Society or Keynesian public finance of whatever kind. So on the face of it, he looks like someone who is very much theologically committed to balanced budgets. And that involves a very austere formula because you can be committed to balanced budget and still be in favor of a big spending state. But the counterpart to that is you need a big taxation state. And that was basically the status quo, even in the US, under Eisenhower. You had a big spending state, but also a big taxing state, which rested primarily on the progressive income tax. So Buchanan comes from this much more conservative tradition that is averse to big spending and averse to big taxing, apparently. Because when you look at the detail of his public finance textbooks, he was also writing textbooks. What he's really doing is advising a shift in the burden of taxation. So he's not getting rid of taxation altogether. He's saying we should move toward consumption taxes. And for him, it's all very ideological to call this regressive because he's a free market economist of a kind. And he's saying, well, this is the perfect form of taxation because what you're saying to the individual is you pay for every public service that you want. So if you want to consume the public library more than your neighbor, then you should pay correspondingly greater amounts. If that is being paid through the general tax fund, you're all paying the same amount. So he saw it as the perfect kind of quid pro quo form of public finance where the individual gets to choose how much the government spends on them.
So I guess for the final question, this might be a big question, but why on earth did Australia adopt some of those ideas that are coming from the US at a very particular time? Why on earth are they so common here in Australia today?
Well, why on earth were they so common everywhere? I mean, I think the peculiarity of Australia is that a lot of these ideas were adopted on the run by people who were not ideological neoliberals. In fact, they came out of the trade union movement, maybe the more conservative side of the trade union movement. Bob Hawke and Paul Keating definitely did the hard yards in introducing these practices into Australia. It's what's so odd about Australia. It was the third way neoliberals came first. And really, you have to wait to John Howard to have the ideological neoliberals saying, these are the ideas.
What can be done to challenge some of this discourse around tax expenditures, to challenge some of the ways in which the taxation system is so regressive here in Australia, but also elsewhere? What would it take?
Well, I think if you think of what the public choice people and supply siders were doing as very strategic politics, they knew that there's a difference between what your party does, in their case, the Republican Party, and what people think it's doing. So they knew that with tax cuts, everybody would think that the Republicans had to be the party of balanced budgets. the party of kind of fiscal restraint. And yet Republicans are spending like wild and leaving behind these massive deficits because they're using the tax code to spend. They knew they could do this bait and switch, and that was all very strategic. I think there needs to be a lot of public education, basically, about how these things work. So I think the role of the media and journalists is very important here. I don't think these are inherently difficult concepts to grasp, but I do think they need to be explained. And some kind of expertise about tax expenditures needs to be disseminated in a more popular way.
Well, Melinda Cooper, thank you so much for joining us tonight. Melinda Cooper is a professor at the Australian National University. We spoke at the event Taxing Times. Please note that opinions expressed on FreshEd are solely those of the host or the guest interviewed, not FreshEd, which takes no institutional position. If you've liked what you've heard today, please rate us wherever you listen to podcasts. Reviews really do help. FreshEd's team includes Fatih Akhtas, Obafemi Ongunle, Phyllis Che Mensa, and Jose Neto. Original music for FreshEd was created by Digital Primate. FreshEd is an independently run podcast without advertisements and is made possible by the support of the University of Canberra, NORAG, the Shakdev Family Fund, and listeners like you. Please consider donating to FreshEd by visiting freshedpodcast.com/support. Thanks for listening. I'm Will Brem, and I'll be back next week.